Okay, stock market update, my friends. Which stocks do I like? How did the week behind us go? It's the 20th of January. We're going to look forward to the week ahead and the most important stock. So let's get right into it. And here we are. Right, first things first. This is a measure of the valuation of the market at the moment. Energy on a price earnings basis. So share price relative to profitability. Energy still looking relatively cheap, and so are the diversified banks. It's been like this for a long time, and you can see one or two of the internet companies as well. That's performance of the week. That's just gone. Tesla I've just bought into in the past week, and Nvidia I have as well. So I'm pretty happy to see those going up. I'll talk about energy and which ones I've got out of in just a second. But those were pretty much the only parts of the markets going up overall in the past week. Another measure of valuation is price earnings growth. And those the share price relative to growth in profits. And what you can see with that is energy is the only really cheap sector. And again, Tesla meets the market there, and we'll look into Tesla in just a second. Before we do that, let's look at the S&P 500. And what you see, and I want to draw this for you here, is it is touching that point and falling back again. Now, it's done it before, done it before, done it before, and it started off here at January of last year. What we see is really a battle between short and long-term money. Long-term money represented by this measure of momentum, and it's sort of flattening to declining depending on how good your eyesight is. Whereas the weekly, which is under it, is still trying to push ahead, still trying to rise. Beneath is stochastics, ignore that for the moment. So it's a pressure between the long-term money, which is still showing downward pressure, and the short-term money, or the shorter-term money, which is on the way up. And that battle may well resolve itself eventually at some point, maybe when it declines there, and then I suspect likely move forward. That's the most likely environment, which means whilst I've got a whole bunch of stocks that I want to purchase, I'm holding off on purchasing some of them. Now, what about some of the big bellwether stocks? What does that tell us about the market? Well, in the case of Apple, for instance, which I own, it's fallen below its support. As you know, it's climbing back up, and often that support becomes a resistance, and we would expect a 23% return in the next 12 weeks. That's my forecast. The worst case I don't think will happen, which is a 35% drop in Apple down to that support. The MACD on the monthly is still falling over there, so there's going to continue to be downward pressure on this company. Okay, Microsoft, which I still own, and it's fallen 40% to its lowest point from its peak up there. However, it's on this downward channel, which means its overall direction is still lower. At some point, this will turn around. And you can see why the S&P is a little bit further along the line, the index as a whole, than is Microsoft, and it's trailing somewhat. It hasn't bottomed, and you can see what happens when they haven't bottomed. They sort of rise a bit there, and then they fall back. And this may well fall a bit more before it breaks upwards, which I think it'll eventually do. Not least its investment in ChatGPT. Now, Amazon. Okay, that's fallen a lot further than Apple did below its support. It started to move back a little bit. Were it to continue on that trend, that's a 50% return from that base. I own it. It's still not quite found a base. You can see the monthly MACD is still declining somewhat, so it's not quite found a base yet. Meta platforms, well, we got the bottom over there. And were it to continue anywhere along this line, then in about 2 years, you'd end up with a 340% return. Will that happen? We don't know that as yet, but it's on track. And I don't have a problem, despite it having fallen far more than I thought it would. It fell 77%, continuing to hold on to this one. Where are we on PayPal? Similar kind of unfortunate story of a stock which dropped 77%, just like Meta. Started to rise, fell back. It's coming back again. Well, can it deliver 42% in 2 years? It's starting to form a base, and now you know what a MACD monthly base on momentum looks like. Halliburton, one we own, continues in the right direction along this channel, and that means we continue being on target for that 81% return from that point that we're anticipating. Okay, Occidental Petroleum, which I still own, but it is really at this support, and it's got to hold that support for me to continue holding it. The worrying is the MACD may well be dragged lower because the weekly MACD is also falling. So short-term money may well drag the longer-term money lower, and if that selling happens, then this will fall off. It may well go like that, but if it does drop, I'll probably get out at that point. Adobe, I show this more for educational purposes. Again, what does a turnaround in a company look like? It's not happened quite yet, but we're tracking it every week so you get to understand what it might look like. It's formed something of a little bit of a base over there, and we'll see how that goes on to transpire as we carry forward. Okay, now sterling US dollar, which as you know was one of my saving trades of last year because it was such a huge gain, risen, fallen, risen. It's starting, as the dollar weakens, it's starting to edge higher. Will it get to these kinds of levels? We shall see, but we are looking in that direction, and I'm still long sterling US dollar. Okay, it hit the target that I thought it would and gave me my stellar returns a lot quicker than I thought it would. I think it will go towards that direction, and for those who are into these things, that is an upside down head and shoulders pattern, which means that distance should be how much to the upside it goes, which would pretty much bring it to the levels it used to be, and that's my most favored projection. I'm still long sterling US dollar, very clear on that. APA, you can see it over here. You can see the projection that we've got, still on track, no issues. Just a bit worried that's getting a bit toppy, that MACD, and it might fall lower, and that could go low. So just keeping an eye on it, Mastercard. Now, this is a special situation. It's not on our approved filtered list. It hasn't made that, but as a special situation, a lot of hedge funds talking about it. I've bought into it, and that's what we're projecting from that point. We're already here, so we'll just keep an eye on this one, and it's got probably further to go. After taking most of last year off, what I'm hoping for is we get that kind of a trend this year, and it takes, it's an on year, as it were. Visa, where are we on that one? Again, similarly from that base in that channel, we'd be looking at a 26% return, where it's already doing a large amount of that. But actually what I'm really looking for is that we get this kind of a trend having begun here, given that last year was a year it just took off. So as in it didn't do anything last year. So we're looking for those kind of returns there, and I do own that. And the MACD is flattening, which is one of the other reasons why I think it'll go up. So it's a special situation play. It's not in the approved filtered list either. Now, Disney, as I've said, it's hit these levels on several occasions before, and when it has, it's tended to go up 100%. So will it repeat it? That's what I'm anticipating. Another special situation play, especially because this MACD has fallen so much, and that's what we're anticipating. And as that happens, this is what we're anticipating, and that would give me 100% return in that one. I'll do a part 2 of this because it's otherwise going to be very long. So keep an eye on it. Don't forget to like, follow, subscribe, depending on where you are watching this, and look at the links in the bio as well. Get ready for part 2.